All right, check. Great. I think everyone can hear me. Hi, everyone. I think we're few, but we're proud, and we're going to talk water today. So my name is Matt Payne. I'm a partner with Westwater Research, and I'll be providing an overview of water markets in the West, and in particular focusing on one of the more interesting markets, which is the California market. And I know we're in the Midwest. There is a water market here. It's small but developing. All of the market activity, or most of the market activity at this point, is further west, places like Colorado, Arizona, Texas, California. But water markets are really important for farmland investors, particularly investors in irrigated farmland, because if you're irrigating and you're in a place where there are water rights and water markets, you're part of the market, whether you are actively participating or not, and you can use the market to manage risks, generate revenue, and there are lots of opportunities associated with the water market. So that's sort of the connection to the event here and the relevance for you all. So brief background on myself. I'm with a firm called Westwater, as I mentioned. We're a transaction and valuation advisory firm that specializes in water markets and water rights. Our practice is nationwide. Like I said, most of the activities in the West and the water market currently, so that's where most of our focus is, but we do see transactions in places like Kansas, Nebraska, the Dakotas, and so those are sort of new emerging markets that we're focused on. The largest markets are kind of, as I mentioned, California, Arizona, Texas, Colorado, and in those areas we've closed and worked on over $1 billion in water asset transactions, and we work with a variety of different clients in different sectors, have kind of the privilege to work with and see the perspective of a lot of different folks, but a big part of our business is helping farmland owners, growers, to participate in water markets and use water markets to manage their risks and generate additional revenue. So one of the interesting things about the water market is it is nothing like the land market in the sense that it's extremely opaque, right? So if you're looking at making a land investment, a farmland investment, there are resources for understanding pricing and market values. You can call up your network of appraisers or other investors in your market and at least get a general sense of what land's trading for in individual markets. It's not really the case in water. Unfortunately, no one's really kind of tracking the water market, tracking pricing, tracking buyers and sellers. So we've kind of recognized that that's a gap in the market and make an effort to fill that gap with the database that we call Waterlytics. So we have a team of analysts that's constantly tracking water transactions in each of our regional markets, and these markets are very localized, very small, sometimes limited to an individual groundwater basin or river basin. But we're making an effort to track these transactions, be a centralized source of pricing, and so I'll be drawing from this database for a great portion of the presentation today. So starting with a broad overview, sort of west-wide, water markets, as I mentioned, are highly regionalized and localized, and depending on the local market, there are different types of assets and types of entitlements that are being traded. So to go through a few examples, one of the prominent categories of water transactions that we see are surface water rights, and these are transactions of rights to divert a certain quantity of water from a certain stream or river for a certain use. And often these transactions are changing the point of diversion or the place of use or the type of use of that water. And we see these traded in California, Colorado, Nevada, New Mexico, Utah, Washington, pretty much all western states. We're also starting to see surface water transactions in Nebraska and Kansas. On the groundwater side, there are also markets for groundwater rights. These are rights to pump certain amounts of water from specific aquifers for specific uses. These are also all around the West. One of the more interesting developments that we've started to see is aquifer storage and recovery. It's a really important component of water management because, as we know, precipitation is variable. So when it's rained or snowed a lot, river flows are high, there's an ability to take that surplus water and spread it over ground. A lot of times this is in the desert or places where the water percolates really quickly into the aquifer. That water can be stored underground. In some states, the states will recognize that storage with a credit, and the state is actually tracking these credits, and they're tradable credits. So you can get credits for doing aquifer storage and recovery. If you have a credit, that means you're entitled to recover the water that's been stored underground, and that's usually just done through wells. It's pretty straightforward, but this is really just a market around using the natural aquifer system to store water and then recover when it's dry and when it's needed. There's also a market for capacity in these groundwater storage facilities. Moving over to effluent. Effluent is simply municipal industrial wastewater that's been discharged and then treated for reuse. There's a market emerging around trading of that treated wastewater. And this is actually a really important source of supply in some areas for high-value agriculture, particularly along the coast of California, which is really water constrained but has some of the most high-value crop production in terms of fruits and vegetables and also berries. This effluent gets reused a lot for those purposes. And then storage water rights. This is kind of the surface storage version of aquifer storage and recovery. There are rights to store water in reservoirs. Those storage water rights get traded, as does the stored water. So putting the size of the market into context, the figure on the left shows the total dollar value of water transactions that we've tracked over the 10-year period ending in 2018. Figure on the right shows the total volume in terms of acre feet, which is the primary measurement of water that's used in this market by state over the 10-year period ending in 2018. So there's a lot of dispersion and variability in terms of the size of the market. So over that period, you see California, I'm not sure if you can read the chart very well, but that's about $4 billion traded over that 10 years in water entitlements alone, separate from land or other assets. California is by far the largest water market in the West, followed by Colorado. Let's see if I can get my pointer going. That's about $1 billion traded over that time period. And then Arizona at 500 million and Texas at 500 million are the next largest. In terms of volume of water traded, these markets are moving large volumes of water. These are meaningful amounts of water. Water transactions really are an important part of water management in these areas. So in California, over that time period, we had almost 12 million acre feet changing hands in water market transactions. Arizona, over 2 million acre feet. Texas, 1.2 million acre feet. So that's a lot of water that's moving between a diverse variety of users. And we'll talk a little bit more in the subsequent slides about why these markets are so different in size and what's really driving that. So who are the participants in this market? Who's buying and selling? When people think about water markets, sort of the common image that comes to mind is farmers who are growing forage crops or something with a flexible water demand, selling water to relatively high-valued uses, municipal uses, industrial uses like power plants. That sort of prototypical transaction was the norm, say, 15 years ago. Most of the water that was being sold was coming out of agriculture, and most of the water that was being bought was going into the municipal and industrial sector. It's become a little more nuanced over the past 5 or 10 years. So if you can see this chart, I guess I've lost my pointer, unfortunately. The gray portion of the pie charts is agriculture, and then municipal is orange, investors are blue, industrial is yellow, tribes are green. So you can see the sell side has become a lot more diverse over time. Agriculture is still 60% of the volume that's sold into this market. Municipal is 20%. There are some cities that have acquired large portfolios of water, anticipating growth. But until that growth materializes, those cities are selling the water to generate revenue. We've seen more investors participating in this market over the past 10 years. These investors are important liquidity providers in this market. They'll buy water rights and then lease them to generate revenue and hold them for capital appreciation. And they've become important suppliers. And then the biggest change on the sell side are the tribes. Native American communities have a long history of negotiating water rights settlements that awarded very large and very senior water rights to these tribes. And most of these tribes are located in very water sort of constrained areas of the West, like Arizona. And so they've been able to market those water rights into the municipal market to satisfy growth. It's become a really important revenue source for some tribes. Now on the buy side, municipalities are still very active, about half the market. However, again, we've seen a lot more sort of variation in who's buying. 15, 20 years ago, 30%, almost a third of the market, was composed of environmental buyers. So these were governmental agencies or NGOs who had funds to go acquire water and then either keep it in the stream for fish and wildlife habitat or deliver it to wildlife refuges, whatever that sort of fish and wildlife use was. Previously, a very large component of the market. their market share has actually contracted over time. Some of that's due to less funding coming from the state and federal governments. Some of it's also because prices have gone up and they haven't been able to compete with other industrial users and municipal users for water. The other interesting trend we've seen is that agriculture has actually become a larger buyer over time. A lot of that is driven by the expansion of permanent crop plantings in California. Right now in California, probably the largest buyer sector in this market is permanent crop growers, almonds, pistachios, who are either in areas that are surface water dependent and they go into the market during dry years to acquire additional supplies, or they are in areas that are both groundwater and surface water dependent, but given new groundwater regulation coming online, they've been forced into the market to acquire additional water. So very diverse in terms of who the buyers and the sellers are, and becoming more diverse over time. So this slide shows a couple of graphics from some recent studies that we did. The graphic on the left, the map, is one way to sort of get at the agricultural value of irrigation water use around the West. So what we did is we took data on farm revenues for each county around the West and matched that up with data on irrigation water use in each of those counties. Very simple calculation. Numerator is farm revenue, denominator is irrigation water use, to come up with $1 per acre foot that water use contributes to the farm economy. It's not a perfect measure of the agricultural value of water, but it is kind of an interesting proxy to see which areas are earning the most revenue for their farm water use. Now you see some of the darkest areas, which are the highest value per acre foot, are, like I said, along the California coast, Central Valley of California, Pacific Northwest, and then also in the Midwest. Now, leaving that map, if you look to the right, this map shows concentration of water market transactions. So the yellow areas have extremely high concentration of water transactions. The pink areas are kind of high to medium, and then the rest of the map, which is gray, we don't see much water trading. So there's a couple things to note here. First, a lot of the water trading is happening where the agricultural value of water is highest. And then also these happen to be areas that are experiencing a lot of population growth. So Front Range of Colorado, as we know, explosive population growth. Southern California, lots of population growth, although it's slowed in the past few years. Central Arizona, lots of population growth. And then these are also areas that have a lot of sort of variability in terms of precipitation. So the reason these markets are emerging is there's competition. So we have high value ag, we have population growth, and they're competing for limited water supplies, especially during those dry years where there's not as much precipitation. So you really get a sense of what's motivating these transactions. One of the things I like to say to folks when they ask if their water's worth something is, well, look around. Do you see any people? No. Do you see high value ag? No, then your water probably isn't worth much. However, if you look around and you see cities, you see high value ag, then yeah, you probably have a meaningful asset. So I'll move on to the California market. Like I said, by far the largest market in terms of dollars changing hands and volume in terms of acre feet changing hands. And it's also one of the markets where ag is the largest participant. So it's really important for farmland investing, and there are a lot of opportunities for farmland investors in this market. So California market, one of the reasons it is the largest water market is that it has lots of conveyance infrastructure. It is not as localized or regionalized as some of the other water markets in the West because we have canals that run from the northern part of the state and deliver water to the southern part of the state. So we have the State Water Project through the California Aqueduct, Central Valley Project, and that's all intended to move water from where it rains and snows, the northern part of the state and in the mountains, to where the water is needed in the central part of the state and southern part of the state. And that conveyance allows for water transactions along the entire route of all of those conveyances. So not only do you have a large infrastructure for moving water around, but you can also reach a diverse group of buyers and sellers all along the California Aqueduct and the Central Valley Project. So as a result, you have large concentrations of trading in the San Joaquin Valley, Southern California, and then also other areas of the state. There are three sort of types of water transactions that we see in California. The first is what we call a spot market trade. This is just a one-time trade of a certain volume of water. Think about this, if you prefer, as sort of a one-year lease of a water right. So it's just a one-time sale of a fixed block of water. We have multi-year water transfers. These are more analogous to long-term leases of a water right. So 2+ years where there's a volume that's established, a pricing schedule that's established, and then a term of 2 or more years. Then we also have permanent transfers, which are just sales of water rights. This slide focuses on the spot market. So these are those one-time sales of a fixed volume of water. It shows the total volume traded in that market each year, broken down by buyer sector. So the dark blue are agricultural buyers, the lighter blue are urban, so municipal and industrial buyers, and then the green are environmental buyers. And then some of the years are shaded. So you'll see 2007 to 2009 is shaded, 2013 to 2015, and then the last couple of years, 2020, 21. Those are dry or critically dry years. The other years are normal, to the extent there is a normal, or wet years. So a few patterns that you can kind of see in terms of market participation. So in dry years, we tend to have more transactions, larger volumes that are traded. The only kind of exceptions to that would be 2018 and 2019, where despite being normal or wet years, we actually had a lot of water changing hands. And I'll talk about why that's happening in a little bit. It's really being motivated by new groundwater regulation. The other trend to kind of notice is the market share by agricultural buyers. So if you go all the way back to 2004, 2005, 2006, hardly any of this water was being bought by farmers. Now if you go to the last two drought cycles, farmers are the largest buyers in this market. And that really correlates with the expansion of permanent crops in California. A lot of the sort of forage and row crop ground that has flexible water demands is being converted to permanent crops that have to be irrigated every single year to avoid a capital loss. And so what we see are almond growers, pistachio growers outbidding everyone else in the spot market, particularly during dry years. So this really is an important tool, and increasingly important tool, for permanent crop growers to keep producing. The other trend, as I mentioned earlier, environmental activity is really decreasing. Back in the mid-2000s, there were a couple of state and federally funded programs that acquired a lot of water for wildlife refuges. They've since been sort of defunded and frankly outcompeted on price, so they're a much smaller player in the market at this point. So some of the drivers behind the growth that we've seen in that market. So first, Sustainable Groundwater Management Act. That's kind of represented by the map in the top left of this slide. The entire orange area of that map are critically overdrafted groundwater basins. In 2014, the state of California decided for the first time that we're going to statewide begin regulating groundwater pumping. Before 2014, in most areas of the state, if a farmer needed water, they could use their wells to the extent needed for beneficial use on the farm. That caused, in some areas, significant overdraft of the groundwater, and that was made worse by the fact that we had a number of dry years. So in 2014, the state passed the Sustainable Groundwater Management Act, said that all of these local areas need to develop a plan for getting to sustainability, and that was defined differently across the state, of groundwater pumping by 2021 or 2022. Plan had to be done, and then the plan had to actually have a path to achieve sustainability by 2040. So these areas are going to be slowly reducing groundwater pumping over time until they achieve sustainability, whatever they've decided that means, by 2040. In most cases, that simply means less groundwater pumping. Now the fact is, a lot of relatively low value crops are going to come out of production, and they'll be marketing their water to higher valued crop growers. So we're going to see some land coming out. We're going to see more trading of water to address this reduction in groundwater supply. Moving to the right, we have population growth. The state of California is still growing. It takes water to meet those needs. The cities are having a hard time supplying their current residents, given the water supplies they have, much less accommodating and serving new residents. So a lot of water agencies, municipal water companies are developing new water supplies to serve those new residents. Some of that is coming from the market, from acquiring water. Shifting agriculture, I've already mentioned that tree crops are really taking the place of hay crops and other sort of annual crops or forage crops throughout the state of California. It's causing water demand to be much less flexible, and so you don't have as many crop growers who are able to cut back during dry years to make water available to the market. Instead, those farmers are buyers in the market. And then on the bottom right, we also have hydrology. So this chart shows State Water Project and Central Valley Project water allocations over the 2000 to 2020 time period. If I'm sitting in your seat, I just see a lot of variability in that, and that's the point, right? In some years, you may have an 80 or 100% allocation from your water project. Some years, it's zero. It's really difficult to deal with that variability, especially if you have permanent crops that don't have a flexible water demand. So in those years where your State Water Project or Central Valley Project allocation dips, you may be out in the market acquiring additional water supplies. So this slide shows how prices are performed in the spot market in California. And this covers a 30-year period, actually. So we're going back a long ways in time here. Few trends. So the horizontal blue line is average annual price. The vertical lines are the min and max price within an individual year. So over time, prices have risen, no surprise, and they've risen at a rate that's faster than the general rate of inflation. So there's a lot of competition in this market and growth and demand that's pushing those prices up. The other factor to notice is that in dry years, which are indicated by sort of the gray bars, you have average prices that are much higher, and then you also have a lot more variability between the min and max price. So that's really interesting. There's a seasonality to that pricing. So in kind of the late spring, early summer months, we see peaks in pricing, and that's because those permanent crop growers are out in the market trying to lock in their water supply for the summer. And they're willing to pay a premium for the certainty of knowing they have that water early in the season, so it'll be available as they move forward. And then you still have some urban buyers that during extremely dry years are competing at the high end of that market and paying really premium prices. So any sort of investor, whether you're a farmland investor or other type of financial investor, if you see a chart like this, the biggest takeaway is risk. I mean, that's a lot of risk, kind of a 5 or 10x movement in a key input price from one year to the next with a ton of uncertainty. So that type of movement has been really difficult to manage. It's been tough for permanent crop growers. It's been tough for cities to budget around. And really, in the past, the tool that's been used to manage this variability is physical storage. We've seen a lot of underground storage facilities developed to take water during those wet years, like 2011, where water is $50 an acre foot, store it, and then either use it during subsequent dry years or sell it at a significant multiple. And we've also seen surface storage. The problem with surface storage is that it takes a long time to permit and construct, up to 20 years sometimes. So those projects, you can't just snap your fingers and bring them online. So one of the projects that we've undertaken is to bring new tools to this California market to help manage that price volatility and that risk. And I'll get into that in the next slides. So I mentioned early on that this is an opaque market. There isn't a network of appraisers that you can call to understand what water is trading for in your market. It just doesn't really exist. There is a robust rumor mill in the California water market, but it's as reliable as you think your neighbor is. So what we've tried to do is develop a price index for spot water in California. And that's what this slide shows. That blue line that kind of moves left to right is the California Water Price Index. This is really just an informational tool so that buyers and sellers in this market have a place to go that's updated in real time as one indication of where water is trading. Now, regional markets may be above or below this index, but they can, just like any commodity, understand their basis to the index and make decisions accordingly. It's a volume-weighted, location-adjusted weekly price. So this index is updated weekly, published every Wednesday morning, and it gives you a price per acre foot that's representative of California's spot market for water. We're publishing this in partnership with NASDAQ. NASDAQ is a very robust global indexes business, along with their sort of normal stock exchange business. They publish the QQQ, which I'm sure some of you have an ETF of in your portfolio, and about 40,000 other indices, actually. So water is new to NASDAQ, and this is an index that they're currently publishing every single week. Now, the chart shows the index performance going back to March 2020. So this is an interesting time frame for this index because 2019 was one of the wettest years on record in California, and 2020 was extremely dry. So you're looking at the index during a time period where there was a big shift from a super wet year to an extremely dry year, and you see the index responding in terms of price. March 2020, it was about $200 an acre foot. By June of 2020, it was around $750 an acre foot. The dots on the chart are indicative of individual transactions that went into that index. The larger dots are larger volume transactions. Smaller dots are smaller transactions. So you can see that given that this is a volume-weighted index, the index tracks really well with actual individual transactions, in particular the larger transactions. You can see there are some smaller transactions, particularly in 2021, that went off at really high premiums to the index, but we're talking 30 acre feet, 50 acre feet, whereas the trades that move the index are 10,000 acre feet, 15,000 acre feet. So the index is pretty reliable in terms of representing where the bulk of the volume is being traded. So after summer of 2020, we had some softening of the index. That's typical of the seasonality in this market. Frankly, fall and winter water is worth less than summer water because it's not as useful for farming. Fast forward to March of 2021, and the state and federal government in that month announced that project water allocations would be 0% and 5%, depending on where you were. So the lowest allocation that's ever been announced. Prices responded immediately. We saw those spot water prices jump above $800 per acre foot, and by the summer, we're trading near $1,000 an acre foot on the index. So we really see this responding to relative scarcity of water in California. This chart's intended to further illustrate kind of the correlation between drought conditions in the state and pricing on the index. The orange mountains are the U.S. Drought Monitor. It's the percentage of the state that's in extreme drought or exceptional drought as defined by the U.S. Drought Monitor. For the purpose of this discussion, it's just dry. And then obviously the blue line is the price index going back all the way to 2013. So you can see that during the drought period of 2013 through 2015 and 16, prices went up. Most of the state was in a exceptional or extreme drought. 2017, conditions improved. 2017 was another extremely wet year. The price index softened to about $200 an acre foot. Stayed there till 2018, where we had some of the state experiencing drought. Prices went up to about $350 to $400 an acre foot. Came back down in the wet year of 2019. And then 2020 rose dramatically again. Now, one of the interesting things to note here is that this index, over this time period, is becoming more responsive to those drought metrics. So back in 2014, the index only hit $700 an acre foot when we had 80% of the state in extreme drought. Now, if you go to 2020, we were hitting $700, $800 an acre foot when we only had 10% to 50% of the state in extreme drought. And we're expecting this trend to continue. These water prices are only going to get more responsive to drought. So what can we do about this? That variability, as I mentioned, is a real risk. It's a real problem, particularly for permanent crop growers and also for cities who are participating in this market. What we've introduced to this market is a water futures contract. This is listed on CME. We listed it back in December of 2020, so it's been trading a little bit over a year now. For those of you who farm in the Midwest, you're probably accustomed to the concept of futures. I can tell you that farmers in California are less accustomed to futures. They farm specialty crops that really don't have any sort of futures or financial products. So it's been a bit interesting to introduce this to the California market, but we've been getting the word out and folks are starting to trade this to manage their water price variability. So this is a pretty straightforward cash settled futures contract. There's no physical water that changes hands at settlement. It's just cash settlement. Each contract represents 10 acre feet of water, and it settles to the index. They're quarterly contracts that go out 2 years. So for example, right now, if you bought the March contract, it would settle on the third Thursday of March, and it would settle to the value of the price index at that time. And you can use that to manage your water price and lock that in. And I'll walk through a couple of examples on how that can be done. But the sort of mountain on the right shows the cumulative trading volume in this market. And as of the end of Q3 of last year, there had been more than 10,000 acre feet equivalent traded through these futures contracts. So they are starting to get used and starting to get some traction in this market. So these numbers may be a little small to see, but this is intended to represent a water portfolio and water costs for a representative permanent crop grower, right? So most growers in California have multiple sources of water and a diverse supply of water. They'll have groundwater, so in the top table that's shown is about a third of the water supply coming from their own wells. You typically are in a water district, so your water district has its own water rights and water contracts and will deliver some water from those contracts. In a dry year, that's maybe 10% of your supply. In a wet year, it may be more. A lot of these water districts also operate supplemental water pools, where the districts will go to their growers and their constituents, take subscriptions for water purchases, and then the district will work on behalf of the growers to go into the market and acquire water and bring it into the district for everyone's benefit. So that's another part of your water supply as a grower. And then there's also your own market supply. A lot of growers are now kind of getting out ahead of their districts and negotiating their own water purchases. And in some cases, that's as much as a third of their water supply in dry years. So all that together, you get about 4 acre feet per acre. That's typical water application for almonds or pistachios in the Central Valley. The all-in cost of that, if you assume the groundwater only costs your energy and your O&M on your wells to pump, the district supply, there's no cost to the water. The district will charge you a delivery charge, but there's no actual cost of the water. And then your market supply is $900 to $1,200 an acre foot in a wet year. All in, your average for the water itself is $585 an acre foot. If you include delivery costs, pumping costs, you're at more like $780 an acre foot in a dry year for your water. So that's a lot of money. It has a meaningful impact on anyone's budget. So the bottom chart shows what happens if this farmer with this water portfolio would have used the futures to hedge last year in 2021. So in January, the June futures were trading at $530 an acre foot. The September futures. They settled in September at $950 an acre foot. So if you took a long position of those futures, bought the futures, you would have realized a gain of $420 an acre foot. So if you had done that to hedge your market supply, so only the 2.2 acre feet that you're actually buying from the market, you would have had the net effect of bringing down your overall water costs to $550 an acre foot. So from $780 to $550 an acre foot from an actual futures trade that was available last year. That's a meaningful reduction. That entire reduction goes directly to your bottom line, which can make the difference between servicing your debt or not, right? So it's an important tool that growers really can use and have used to hedge these costs. So this is a slightly more detailed crop budget for kind of a typical almond grower in California. So on the revenue side, we've got a 3,000 pounds per acre yield and price last year of around $2 a pound for almonds. So your top line is $6,500 an acre. Assume you're farming 1,600 acres, your top line's about $10.3 million. This will go up if almond prices improve, but right now this is pretty representative. On the expense side, operating expenses, about $3,000 an acre, $4 million. You've got your overhead costs, $800,000. So if you just look at those, this operation's pretty profitable. But if you introduce the water costs, another $5 million in the unhedged scenario, so 4 acre feet times $780 an acre foot, just under $5 million, there's not much left on your bottom line. So your top line is $10.3 million, bottom line 10.1, you walk away with $200,000 for the year on a 1,600 acre property. So that's pretty thin. Now in the hedge scenario, if you'd been able to bring down your water cost to $550 an acre foot, your water costs are now only $3.5 million, so your bottom line is a lot more attractive at $1.7 million. So that's just really illustrating how, first of all, water transfers, physical water transfers, are really important for getting wet water to your farm, but you need a way to hedge those, and the futures are a good way to do it. So this is just another real-life example based on what happened last year and the way the futures performed. So we had the June contract trading at $500 an acre foot in January. It settled in June at $860 an acre foot, essentially, so a gain of $360 an acre foot. Now, if you're a farmer and you had purchased these futures in January, the way this works, the way any cash settled futures works, is that if you settled in June, you would have realized a gain from your futures of $360 an acre foot. On the other side of the equation, though, you would have been buying water in the water market for a price of $860 an acre foot. So net, you keep your price at $500 an acre foot where it was in January. So your physical water goes up, you gain on your futures trade, and it's effectively a cost offset. That's the whole idea here. And that's why this can be useful without trading any wet water. And the same logic works on the other side. So if you buy some futures and the water price goes down, this can happen. The good news is that your physical water also has become cheaper. So while you may be losing on your futures, you're paying less for your physical water, you've still locked in a price of $500 an acre foot. Now, a question I get a lot, especially from permanent crop growers, going back to this example, is, okay, well, what if I do this trade, but I just can't find any physical water on the market? What if there are no willing sellers and I can't get water to the farm? That's a real problem. We have seen in some areas a real lack of willing sellers. And the way I look at this is you've lost some yield on the farm. You probably kept your trees alive if you were able to pump your wells and get a cup 2.5 acre feet an acre from your wells, but you've lost yield. Effectively, your futures still pay out, and so it starts to look a little bit like drought insurance. So you still get your payout of $358 an acre foot. You may have lost some yield, but there's a hedge on your yield there, even if you can't find physical water. So we see a couple of uses for these. So to summarize, and I'll hopefully leave some time for questions, water's been traded around the West for decades. This is not a new thing, having water being bought and sold in negotiated market transactions. Really, water started trading back in the early 1900s on ditch systems when farmers got together and formed co-ops or ditch companies to develop new ditches and divide that water up in shares. We've seen trades on the same ditches between farmers for a long, long time. And historically, those trades have been pretty opaque, and it's really been a lot of handshake deals. This idea of water moving long distances between different types of uses has really kind of grown in the last 30 years. In the last 5 years, however, the market's grown a lot, mostly in response to drought and also competition among cities and farmers for scarce supplies of water. And we're seeing the market start to mature. So we're seeing more transparency in the market. We're seeing more sort of sophistication in the types of transactions that buyers and sellers are doing. We're starting to see things like dry year option contracts being negotiated. And then given the introduction of financial products that I just walked through, all of those are signs that this market's really starting to mature. And ultimately, for your purpose, the water market is an opportunity for farmers and agricultural landowners if you have a flexible water demand to generate new revenue. And then if you don't have flexible water demand, it's a way to get the water you need to your farm during dry years. So really, it's an opportunity that I think all farmers, particularly in the water-scarce West, need to be paying attention to. And then in the Midwest, these water markets are starting to emerge. As I said from the onset, we're starting to see transactions of water in Kansas, starting to see transactions in Nebraska and the Dakotas. So we're going to see these types of markets develop, I think, in the next 10 to 20 years in the Midwest as well. That's everything I had prepared, but I'm happy to take questions. Yes? Mm-hmm.
Larry ID, and how do you gather that data, and what level of confidence can you have in it? That's one question.
Sure.
The second question I have relates to water transfers from north of the Delta to south of the Delta. And it's my understanding that under the previous administration, some of the administrative delays that had been experienced for years
Mhm.
water and deliver.
Right.
And that's just, how do you view the long-term prospects of more water flowing through the delta and south to the South Valley? You know, is it getting better long-term, that
Sure.
ability to move through the delta?
Sure, okay. Well, appreciate the questions. The first question on the data collection process. The index is calculated from market transactions that we are able to collect data on and report. And you're right, in some cases, there's sort of nothing compelling the buyer or the seller to share that information.
There's private transactions,
Mhm.
they're all over the board.
That's correct. So in almost all cases, a transaction will touch a public agency at some point in the course of the transaction, which is really important because under the Brown Act, public agencies are required to respond to information requests when they can, when they have the information available, and in this case they do. So it'll either be a district that's a party to the transaction, or there will be a regulator. So State Water Resources Control Board, Department of Water Resources, Bureau of Reclamation if it's federal water, that gets to either do the environmental compliance or some other regulatory review. So we have a team of analysts that basically is fully dedicated to reviewing regulatory filings, reviewing district meeting minutes and other district documents to identify when a transaction happens. And so we get a pretty complete record, I would say probably 85 to 90% of when a transaction happens. And then we have to start with that lead and do old-fashioned research by either requesting documents from a district or picking up the phone, interviewing the buyer and seller to get price information. And we have a really high success rate. One of the things we offer if the information for some reason isn't publicly available through a district is if it's a private party buyer and seller, we'll offer to share market information with them, right? So you tell me what you purchased your water for, and I'll tell you what the rest of the market around you is doing. And so we have a good information sharing relationship with most of the players in this market. So we get really good coverage. The other important thing about the data collection and the index is it has to be timely, and it also has to meet our criteria for a completed transaction, right? So we are only reporting on Wednesday, say of this week, transactions completed last week. And so if we, for some reason, don't get information on the transaction during that week, it doesn't go into the index because we can't be this Wednesday reporting things that happened 3 months ago. It won't be timely. So we have pretty strict criteria around that. And the other is we're only reporting consummated transactions. So if it's a term sheet that hasn't closed, if it's a proposed deal that hasn't cleared regulatory approval, it's not going into the index because things like that can move the index without being a real trade. So we have pretty strict protocol around that. Does that answer the question? Yeah, okay. And then north of the Delta to south of the Delta. North of the Delta, Sacramento Valley is extremely water rich. There are a lot of sort of very senior, very reliable water rights used for things like growing rice and crops with flexible water demands. The more firm demands are typically south of the Delta. So during dry years, you see large volumes of water being traded from the Sac Valley down to the San Joaquin Valley. Those, depending on the type of water, need state approval and or federal approval. Each of those approvals has an environmental permitting component, right? So if it's federal, there is NEPA. If it's state, there's CEQA. What you're referring to, I think, was the Trump administration tightened up the timelines for approving through NEPA. So you had 4 months, say, to get your NEPA done if it was a lower level of compliance, which most of these are. I think that was really positive. It gave buyers and sellers a lot of certainty about being able to get their water through the Delta and getting those approvals done in time. Frankly, I think that those transactions are such an important part of the market. I don't see them going away. I only see them getting easier. There are so many sort of high-valued players that depend on those transactions with a lot of political influence that they're going to be part of the market going forward. And I don't think the state or the feds will be throwing up huge obstacles to those, especially over the next 10 years or so. That's my perspective. Yes?
Are there traders involved in the market?
There are, yeah. So there aren't many, but there are some sort of investors that have organized themselves to look like water traders. And so what they'll do, it's quite interesting. They'll make investments in storage, so underground storage or surface storage. They'll be able to capture water during wet years when it's cheap, store it, and then remarket it during dry years. And there are a couple of businesses that have started doing that. And they're actually a really important part of the market. In extremely dry times, they're some of the only sellers that can actually perform. And so they have filled an important role in the market. Now in the futures market, so not the actual physical trading of water, but the cash-settled futures, a lot of the trades that have gone on, either the buyer or seller, one of the parties has been a financial participant. So a liquidity provider or a commodity trader that is providing liquidity to that futures market.
How, with the persistent droughts up there, how do they deliver? And I think need is down the dribble now. I assume the private storage units are also suffering, and they, if something in the future is not there to deliver.
Well, it depends on what they have. If they've stored physical water in the valley, some of them do have water in storage still, good inventories that they can actually deliver. Or if they have really senior water rights, they'll still be in priority even during really dry years, and so they can still deliver. And that's really what they're making investments in, is either those senior priority water rights that won't be curtailed, or in building large inventories during wet years so they can deliver. Now, if it's an extended drought period, we have seen a couple of occasions where the traders have sold their entire inventory. So the third or fourth year of drought, they may not have any supply for the market. And so they just have to wait till it rains again.
Municipalities have rights that they can take from farmers that may have historic senior rights, but all of a sudden our city needs it and we're going the level now.
We haven't really seen that. The water rights sort of structure in the West is based on prior appropriation. Most of the more senior rights are held by historic agricultural uses or mining uses, and we've never really seen a taking like that. We have seen a lot of cities going and buying those rights from those historical users and paying market value, which for a lot of farmers has been a great exit. But we haven't really seen a taking like that, and I don't think there's a lot of risk of that. Those water rights are extremely well established and legally protected, and so if a city or other government were to decide, oh, it's more important for municipal use, I think there would have to be some compensation to the farmer. Yes?
So, I'm an urban cowboy. I don't know a lot about land. I sell it. I'm a real estate broker, mostly residential. So I don't want to sound stupid, but first of all, I've never heard of acre feet, I don't think.
Sure.
And it seems like, and I'm a proud Iowa man, but it seems like we live off of a lot of rainwater that we get in, and it's not, our crops are not, I don't know, I'm not in the ag world, but when I drive the Iowa roads all the time, there's not a whole lot of people watering their crops.
Mhm.
So I wonder about that, and maybe that's why we don't have as much transactions as you're saying out west. And I don't know why I haven't learned this yet in real estate class or law class or something about water rights. That's why I was so intrigued to come here. If I sell a piece of land to a developer or to an investor, they get the water rights to that land, right? Is that kind of how it works?
Think of it like mineral rights. You can keep the mineral rights, you can sell the mineral rights, you can lease the mineral rights, they're a property right. And it varies by state, right?
Yep, that's exactly right.
Very much by state.
And that's why it's so important to do your due diligence on water rights during a transaction like that. If you're listing the property, you kind of got to figure it out and be able to provide information to the buyers, and then also the buyers. A lot of these transactions spend a lot of money on water due diligence. And then you also have to be really careful in the purchase and sale agreements and in the recorded documents, whether you reserve the water rights or pass them on through the transaction. It really just depends on the state, the type of water rights, and what the buyer and seller agree on. Mm-hmm. Yeah.
An acre foot is 327,512.
Close. 326,000 is the rounded. Yep. So it's picture an acre of land a foot deep. Acre foot. Yep. Yes.
On one of those slides, where it showed the activity and use, there seemed to be a lot of activity in northeast Colorado.
Yes.
Why?
Yep. So that is in the South Platte River Basin, which has a ton of irrigated agriculture. There's a lot of water used for irrigated agriculture, and irrigated ag owns the most senior water rights dating back to the 1860s in a lot of cases. It's also a place where you're seeing rapid population growth, not just Denver, but we're talking Fort Collins, Greeley, Windsor. That's been one of the hottest real estate markets in the country for a long time. We've seen a lot of new housing starts. So what's happening is in order to build a new home there, or a new subdivision, the developer or the city that's serving the development has to go to the market and buy water from the farmers. And they need to buy the senior water. Most of the cities have a list of sort of criteria that the water has to meet, and one of them is seniority, so that it's more reliable. And so we see a lot of developers and cities buying water from farmers in that market. Now, it's pretty interesting. A lot of the water buying that goes on is to meet future population growth, like 20, 30, 40 years in the future. So what a lot of these cities will do is they'll go to a farmer and they'll do a purchase and lease back of the water. So if you have shares on the Union Ditch, for example, what a city will do is come and buy the shares and then lease them back to you for 20 years at just the cost of the ditch assessment. And then when 20 years are up, they get moved to the city's use. So it's really all about planning for future growth. But it can be a good opportunity for farmland investors if you want to exit now, but keep farming the place at a relatively low cost. Those leasebacks tend to be really, really cheap. So that's kind of the way that market's working. All right, well, if there aren't any other questions, appreciate everyone's interest and attention, and I'll be around if there's any further discussion. Thank you.